In today's video, I'm going to teach you how to adjust investment growth rates in ProjectionLab. Before we begin, a quick overview. Growth rates are the engine behind your projections. They tell the software how fast investments may grow and how prices may change over time. The two places you'll use are the plan level defaults and the advanced editor for custom or historical paths. Start by opening plan settings and heading to growth rates. This is where you establish your baseline assumptions that apply across the entire plan. Set your default stock and bond returns and your inflation assumption. Think of these as the background climate for your plan. Unless you specify otherwise, every account and expense will follow these rates. Choose figures that reflect long-term expectations, not short-term noise. For example, a moderate stock return and a conservative inflation rate will typically keep projections balanced. If you adjust inflation, remember it impacts future costs, not just investments, so small changes can shift retirement dates or withdrawal needs. As you tweak these numbers, you're defining the foundation your whole plan stands on. When you need more precision, use the advanced editor inside the same growth settings. This tool lets you create custom, non-linear paths or plug in a specific historical sequence of returns. You can map year-by-year values, create periods of lower or higher returns, or mirror a market cycle from the past to see how your plan holds up. This is especially useful for exploring sequence of returns risk, how the timing of gains and losses affects outcomes. You might model a few tough early years, followed by a recovery or a gentle glide from strong growth down to steadier conditions. Keep the curve realistic and internally consistent with your baseline. The goal is to stress test, not to predict the exact future. If you import or recreate a historical stretch, note that the pattern is what matters. The advanced editor is capturing the ups and downs over time. That's the process. Use plan level defaults for a clean, reproducible baseline that applies everywhere. Then turn to the advanced editor when you want to simulate custom paths or historical sequences without changing your core assumptions. With both tools, you'll see how different growth patterns ripple through your plan, helping you make clearer, more informed decisions. As you experiment, check whether your assumptions are nominal or real, and keep fees and taxes in mind when interpreting results, since growth rates represent gross market behavior, not necessarily what lands in your pocket. The more thoughtfully you set these two areas, the more trustworthy and actionable your ProjectionLab plan will be.